Hello, everybody. Welcome to the Trading with Ashley show. Wow, the markets perked back up today, even though we are still in fear on the fear and greed index. And that's actually good because that means there's a lot of money still waiting on the sidelines to come in. And I must say, retail came again. They brought their game on Friday and they stepped up. They were not afraid of the dip. If you were in my community, you were not afraid of the dip either. In fact, a lot of us are up quite a bit today from the trades that we took on Friday when everything was tanking. We are celebrating in the community. We have three brand new millionaires. We've got Charlie, Scott, and Sheila. We are so excited for you and we love celebrating with you. And I'm most proud of this note I received from one of my recent boot camp members. Her name is Kate, and she was calm, cool, and collected on Friday. She did not panic. She took advantage of the fire sale that we received. Now, I don't know if all of the volatility is over, but if you are tired of navigating these markets alone and you want to be a part of a community that actually helps their traders get through difficult situations like we have experienced in the last couple of months, then consider joining. If you're in our new trader network with our smaller accounts, you're doing extremely well with the challenge. Most of you have made almost $900 and the challenge is not even over. Super excited for you. One of the top things I hear from individuals that finally take the leap and join my community is they wish they would have joined sooner. But that's okay. It's better late than never. For those of you that are curious, I'm actually going to show you how we have performed this year with our wheel strategy trades. It really is an incredible way to trade, and I'm going to show you how we have performed against the market. So this might give you confidence to at least try the wheel strategy. What is the wheel strategy? It is 80% of the trading that I do because it is a safer way to trade. And when you're trading the wheel strategy, it is meant to be more passive in nature. I don't want any of my community members stressed out or hyper-focused or glued to a screen. In fact, most of us got out of the rat race of corporate America so we could enjoy a more relaxed way to make money, and that is the wheel strategy. Why does the wheel strategy work so well? Well, you're actually agreeing to buy stocks at a very fair price based on where it is trading in its price life cycle. And when you follow that formula, and I've taught a lot of you that formula, you can do extremely well. Because if you are put the shares at a fair price and it rides back up the Bollinger Band, or let's say when it rides back up the Bollinger Band, you can then start selling covered calls and you can allow the call away at a fair price. So it's like swing trading, but you're getting this extra kicker from selling puts and then selling calls, but you must do it at the right time to maximize the impact that this has. Let's go into the computer. I'm going to show you a quick look at what we have been up to this year. Let's take a quick look at what the community has been experiencing in the way of trades, and I'm going to show you why this is such a better way to trade. So let's look at how we performed in Q1. Q1 was the roughest for everybody this year. We all experienced this together. Now, the S&P was down by almost 5%. The NASDAQ was down by almost 11%. But in our community, we were taking full advantage of the high volatility. We actually made 9.8% on our money during that very volatile period. Then when things perked up in Q2, let's see how we fared. The S&P was up 10.6%. That's great. It gained some ground. The NASDAQ was up 17.8%. Again, it gained some ground. But us, we were up 27% on our wheel trades. This is incredible performance because we doubled that of the S&P. Now let's look at how we did in September. September was very exciting. We had a 48% return compared to the S&P of 4.3% and the NASDAQ at 6.8%. We had one of our best months yet with all of the trading that we were able to accomplish in September. And if you remember, everyone was afraid of September. But remember, when everyone's afraid, that's when volatility is the highest, and that's when we are able to make the most of our trades. Let's look at my 1-year performance in my trading account. Now, this will differ just a little from what you saw in the community because I call out one trade and then I allow everyone to adjust their trades based on their personal preference. So in the last year alone, not considering any money brought in or out, I am up 118% in the last 12 months. That is even including Black Friday that we had last week. So you can see that results like this are possible if you know the proper way to trade and if you have the support when you're learning how to trade. And just to make sure that you know how to do this, I am going to show you how to sell a put or how to sell a call on SoFi. So let's look at the technicals on SoFi. Right now, we are trading in the middle of the 3-month band. When you are over 50 on the RSI, well, that means that this stock is in a bullish mode. So if I was going to sell a put, I would probably look for something right here around that $25 mark. That's my 50-day moving average, which is an important level of support, and it's also close to the bottom of the band. Let's go sell a put on SoFi now so you can see the keystrokes to actually do this trade. One of the first things you'll have to decide on when you're selling a put is your expiration date. Now, if you're very busy or you're working full time, you might want to choose an expiration date on a sold put that goes out at least a month. Here we are at November the 21st. I'm going to go ahead and select that $25 strike. Now, I will need enough money in my account to actually take ownership of these shares at 25 if I input the shares. When you're selling the put, you want to do sell to open because you're opening the trade. One put represents 100 shares. That's why if you sell one contract, you need enough to buy 100 shares. If we're going for 25, that's going to be $2,500 in cash or a combination of cash and margin. If we go with this strike price and this expiration date, we will receive right now about $175 to make this trade for putting up the money. You can see right here, here's the gain. You get to hold on to all of this regardless of what happens with the trade. Now, when we get to our expiration date, November the 21st, if SoFi is trading at $25 or lower, you will actually be put the shares. Well, it's showing you right here your break even is $23.25 because it is giving you credit for the amount that you received in premium. This is how you can get great quality companies at a discount and get paid to do it. Let's go back to the charts to look at technical analysis to determine if you have 100 shares and you actually want to sell covered calls and have the shares taken away in profit. Let's assume you got your shares at around $25 a share. Looking at this, we are in the middle of the band. So if you were going to sell a covered call, the best time would be to wait until this RSI is closer to 70. But for the sake of this video, let's go ahead and look at a $30 exit on my shares. So if I had purchased them at 25 or if I was put the shares at 25, if I allow them to be taken away at 30, that's going to be $5 appreciation per share that I get to enjoy. I'll also get premium for the covered call itself. Let's go look. Now, when I sell covered calls, I don't like going out more than a week because I don't want to be stuck in a trade if it blows past my strike price. So if you look at that $30 strike, I'm going to go with October the 24th. It's a little bit over a week away from today's date. For this, I will receive around 50 cents in premium. So that's going to be $50 for agreeing to give up my shares in profit. Well, remember, if I got my shares at 25, I will now have at the call away $5.50 per share because I'm getting 50 cents right here in the premium and I'm giving up my shares at $5 in profit. So you can see how if you do this over and over again, how you can really make a lot of great money. It's a combination of the premiums with the call away that makes this so profitable. All trading carries risk. So what are the risks of the wheel strategy and how can you mitigate it? Well, one of the risks of the wheel strategy is if you're not following a system and you just sell a put at any level, you must look at a proper level of support or at a level you would not mind owning the shares at and you'd be willing to hold. The other risk of the wheel strategy is if you are selling covered calls and you go out too far in time and you don't select the right strike price for the call away, well, you could be giving up significant gains. Now, you can't lose money as long as you're selling a covered call at a level that is above the price that you bought the shares or you were put the shares, but you can leave a lot of money on the table. So to mitigate this, I only sell covered calls when I follow a very strict formula of when a stock is at the right point in its price life cycle where the call away would actually be a fair call away. Another risk is if you leverage yourself and put too much money into any one ticker symbol, then you are really at the mercy of that ticker symbol. The reason I don't like to put more than around 10% into any one ticker symbol is I don't like the drawdown on my account if that one ticker symbol doesn't perform. After all, you're dealing with one CEO, one board of directors, one particular hit piece on the stock, one earnings report. When you are dealing with just one company, I like to ensure I don't have too much in that one company. Now, if you're working with blended ETFs, that's a little bit different. There's not as much drawdown because you are dealing with a variety of companies in that one ETF. I hope that offers an alternative for those of you that are looking for an alternative way to trade. Another note that I wanted to share with all of you. Please be careful if you're using margin. I restrict myself only to 30% margin, and that really helps me from losing control of any of my trades. I don't like that if you use too much margin, then the broker can decide to liquidate your positions at a loss. One of the best parts about the wheel strategy is if you have a losing trade and it's a quality company, you just have to be patient. Eventually, that trade should rise again, and then you should be back in the green. But if you're highly leveraged on margin and all your positions are liquidated, you don't have the luxury of riding that price action back up. So please just be careful. And if any of you are super nervous about that, and again, you want to be a part of a community, we will be glad to be here for you. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I'm going to leave a video for you that a lot of you have told me you really like and it's very helpful. I'm going to leave that video for you right here.